Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. You know what's a perfect income stock? It's the one that it has a reliable high yield distribution and a stock that is rallying significantly higher. It's a rare combination. More often than not, you're faced with the high yield dividend because the stock has cratered. Today's income pick, Nordic American Tankers Ltd, traded on New York Stock Exchange under symbol NAT, is operating in a sweet spot right now. Its share price is ripping higher. Wall Street analysts think that it still has 35% upside potential, and industry dynamics point to a far bigger gains over the next 3 years. As for its dividend, in an October 25th press release, management noted that Nordic American Tanker is in an excellent position. Its time chartered equivalent, TCE for short, to all major oil companies are in range of $40,000 to $70,000 per day. Nordic's operating costs are $9,000 per day. According to the management, it calls itself dividend company. All our actions have main goal to maximize dividend. You can't ask more from a company than that. John?
Yeah, thanks, Mo. Nordic American Tanker is a marine shipping company that acquires and charters double hull tankers in Bermuda and internationally. It currently operates a fleet of 20 Suez crude oil tankers. In fact, it only has Suez Maxes in its fleet. What are Suez Maxes? They're medium-sized oil tankers. They're larger than Aframax, but smaller than VLCCs. But they are the largest ship that can transmit the Suez Canal, which is an artificial waterway that connects the Mediterranean Sea with the Red Sea. Now, Suez tankers are around 900 feet long, and they can carry anywhere from 800,000 to more than 1 million barrels of oil. They're also primarily used on long-haul routes, like a trip, say, from Saudi Arabia to the United States.
John, with fears of recession still looming, you wouldn't think now would be time to look at shipping stocks. Shipping companies move commodities and product, and if the demand isn't there, earnings would be expected to fall, right?
Correct, but there are a couple reasons why investors should keep Nordic American Tanker on their radar. First, oil prices may be down from their March 2022 highs of $130 per barrel, near $76 per barrel right now. But ongoing OPEC supply cuts and higher oil prices throughout 2024 and 2025, expected increases. Oil prices could average $120 per barrel in 2024 and $100 per barrel in 2025. Second, there's actually a global scarcity of Suez tankers. The world Suez fleet is hovering around 577 vessels. Only one more new Suez vessel will join the fleet this year, and only 6 new vessels will be added to the global fleet in 2024. Now, the big question, why not just order more Suez tankers? Well, the available shipyard capacity has, to a large extent, been booked by container, gas, and dry bulk shipping, leaving very limited capacity to build additional Suez tankers, at least until 2026, and this should keep the tonnage balance in Nordic American's favor for at least several more years.
John, I see that this company's revenue have increased 408% year to date, and net income has improved by 100 million.
Yeah, Nordic American continues to have a blockbuster year. Second quarter revenue increased 95% to around 67.8 million. Revenue for the first half of the year increased 408% year over year to 154.8 million. The company reported second quarter net income of 26.8 million or 13 cents per share, and that's up from a second quarter 22 net loss of 4.0 million or a loss of 2 cents per share. Meanwhile, year to date net income was 73.7 million or 35 cents per share, and that's up from a year to date loss of 30.9 million or a loss of 16 cents per share in the first half of 2022. Two other quick numbers: the average TCE rates for all of its 15 spot vessels during the second quarter was 43,200 per ship. Including the 4 vessels which are on term contracts, the total TCE rate for the second quarter was 39,300 per ship. Now that's up 95% from $20,080 in the second quarter of last year. Now, according to the company, this represents one of the strongest second quarter TCEs Nordic Tanker has ever achieved in its 28-year history. And on as far as balance sheet goes, Nordic American also continues to have one of the lowest debt levels among publicly listed tanker companies. It has a net debt of 159.8 million or just 8.4 million per ship. The company stated quite wisely that its objective clearly remains to become debt-free.
And here's something exciting for income hogs. This company just reported its 105th consecutive quarterly dividend.
Yeah, Nordic American Tanker is clearly living up to its reputation as a dividend company. It declared a second quarter dividend of 13 cents per share, and that's up from 3 cents per share in the same quarter last year. This works out to an annual distribution of 52 cents per share for a yield of 11.28%, which is quite high. That's easily more than double the current inflation rate of 3.2%.
And John, could one say higher dividend payments are coming here?
Well, Nordic American's quarterly dividend fluctuates, of course, based on earnings and other TCE dynamics, but it certainly looks like it, at least in the near term. In its second quarter press release, the company noted that, and I quote, higher earnings will result in higher dividends, end of quote. And it's providing strong guidance for at least the next few years or so. So yeah, I'd say higher dividends are coming. And thanks to strong financial results and a robust outlook, Nordic American stock continues to outpace the broader market, up 61% as of this recording a year to date and 53% year over year. Nordic American Tanker stock is actually up approximately 24% since we last looked at the company back in early June. Now, despite the market crushing gain, Nordic American stock still has plenty of room to run, with even a conservative Wall Street analyst providing a 12-month share price target of $5.55 per share to $6 per share.
John, thank you so much for your analysis. Nordic American Tanker owns one of the largest fleets of Suezmax tankers in the world. It has a strong balance sheet and is reporting impressive earnings growth. The outlook looks even more bullish. It continues to be strong, and higher interest rates have kept oil inventories low. A tough combination for consumer as we head into the winter. In addition to tight supply and higher prices and the scarcity of Suezmax tankers, geopolitical tensions and war being waged in Ukraine, Russia, and Israel, Palestine set up an interesting dynamic for Nordic American tankers over the near and long term. That's it for today. And make sure to go to incomeinvestors.com to get our free special reports on our top 3 income stock to own today. One of those stocks is currently yielding 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.